Founded in 1926 under the name the Netherlands Trading Society, Saudi Hollandi Bank has since expanded its product offering and introduced a number of technical innovations. Here to discuss the Saudi economy and key developments in the region is Managing Director Dr Bernd van Linder. Bernd, welcome.
Thank you, Nick.
How has the economic growth impacted the Saudi banking landscape?
The Kingdom of Saudi Arabia has seen some very strong economic growth over the past couple of years. Non-oil GDP growth has ranged from 5 to 7% and is forecasted to grow at least at a pace of 7% in the coming years as well. This GDP growth is evenly spread across many sectors. We've seen growth driven by investments made by the government in all kinds of projects, as well as the private sector. We've seen corporates expanding their production capabilities, but we've also seen very good growth in the retail sector. The Saudi middle class is expanding, Saudi employment is expanding, and this has resulted in a demand for all kinds of products on the retail side. Last but not least, the government as well as the private sector, including Saudi Hollandi Bank, have a very strong focus on development of the SME sector. Small, medium-sized enterprises are seen as a main creator of jobs, as a main engine of economic growth, and as a great focus from all parties involved on further developing this sector.
With per capita income on the rise, will the retail sector dominate competition between banks?
The competition between the 12 domestic banks has always been very fierce, especially on the retail side. With an increased per capita income, as you said, with an expansion of the Saudi middle class, that competition will only increase. Ultimately, competition will be decided on the basis of who is able to provide the best customer service across all the channels. My firm belief is that the bank that's able to serve its customer best across all channels, branches, mobile banking, internet banking, is the one that will do best amidst this fierce competition.
So to what extent do Saudi corporations understand the benefits of issuing debt versus equity, and how can the uptake of these instruments be developed?
When you look at debt capital markets, there are three elements that need to be in place for these markets to grow. You need good issuers, you need interested investors, and you need strong supportive regulation and legislation. Over the last years, we've seen a good increase in the number of blue chip Saudi corporates that have been issuing debt, ranging from Olayan, the big conglomerate, to Tasnee, one of the top petrochemical companies in the world. All of them have accessed the debt capital market in a Sharia compliant form. On the investor side, the growth of the insurance industry and the growth of specialized funds, mutual funds, has helped to create a good investor base as well. The last element has been in place for a number of years in the Kingdom of Saudi Arabia. We have a very supportive regulator in the central bank, SAMA, the Saudi Monetary Agency, as well as the Capital Markets Authority. Both of them are very supportive for further growth of the capital markets. So as of today, all the elements are in place: investors, issuers, as well as strong support of regulation for further growth of the debt capital markets in the Kingdom of Saudi Arabia.
Now, looking at the Basel III Accords, how will they affect the ability of banks to offer new products and services?
The effect should be minimal on the Saudi banks. When you look at a regulation that has been put in place by SAMA, the Saudi Monetary Agency, in principle it's very similar to what Basel III is trying to achieve. So SAMA always has had a strong focus on high levels of capital, good quality capital, and good liquidity positions. When you look at the Saudi banks, all of them without exception have high capital ratios, very low leverage ratios, very strong liquidity positions. So in essence, the Saudi banks are used to operate under a regulatory regime which is very similar to Basel III already.
In the context of the international Islamic finance sector, how do you assess the role of Saudi banks when compared to your Asian counterparts?
Some of the world's biggest Islamic institutions are headquartered in the Kingdom of Saudi Arabia. The biggest Islamic bank is a bank headquartered in Riyadh. In the Kingdom of Saudi Arabia, Islamic finance has developed as the result of customer demand. Our customers demand us to provide fully Sharia compliant solutions, both on the retail side as well as on the corporate side. As it is driven by customer demand, and as banks are ultimately in the business of meeting the demands of their customers, this development will only continue.
Finally, how are banks responding to growth in Islamic banking in terms of product development?
Islamic banking in the Kingdom of Saudi Arabia is driven by customer demands. So if customers demand certain products to be available in a Sharia compliant form, banks will make sure that they are available. All of the banks have invested in their product development capabilities and their structuring capabilities. And what we have today is essentially a full range, a complete range of Sharia compliant products. Whatever product is available in a conventional form is now available in a Sharia compliant form as well, all driven by customer demand.
Bernd, thank you.
Thank you, Nick.